Election uncertainty isn't gone yet, which is why stock market action at the open of trading on Wall Street Tuesday is subdued. Investors are still in wait-and-see mode until they learn who the president will be for the next 4 years. Stock futures were trading modestly higher as voters headed to the polls to cast their vote for either President Obama or Republican Mitt Romney in what is expected to be a close election. And action in bonds, foreign stock markets and the U.S. dollar also was subdued, as investors around the globe await U.S. election results. The yield on the 10-year U.S. Treasury bond tipped up to 1.7%, from 1.68% Monday. Many on Wall Street think bond yields could rise sharply if Romney wins because he has said that he would replace Ben Bernanke when the Federal Reserve Chairman's tenure ends in early 2014. If a White House winner is declared tonight when the polls close, it will give Wall Street some much-needed clarity, replacing what has been a cloudy political and policy picture, experts say. Erasing that election uncertainty, which has haunted Wall Street for months and weighed on stock prices recently, could provide a lift to the stock market no matter who wins, argues Craig Johnson, market strategist at Piper Jaffray. Regardless of who wins the U.S. election, uncertainty declines, Johnson stressed to clients in research note. There will be at least certainty on what party's policies will be pursued in Congress, and the likelihood they will be enacted. Wall Street abhors uncertainty, especially related to policies that most directly affect corporate America, taxes, banking regulations and fiscal policy. Big investors have been reluctant to put money into the market without knowing what the rules of the game are going to be. Similarly, CEOs have been hesitant to invest, hire new workers or proceed with expansion plans until they know who will control the White House and both branches of Congress. Still, not all uncertainty disappears once all the presidential votes are counted. The winner of the presidential vote won't eliminate gridlock in Congress and partisan politics that are making it unclear how and when lawmakers will compromise to avert the so-called fiscal cliff, the combination of tax hikes and government spending cuts that will kick in on January 1st if Congress doesn't act. The experts put a high probability on a split government, meaning another 4 years of contentious debate. Bank of America Merrill Lynch economist Ethan Harris wrote in a report titled Indecision 2012. Most money managers, analysts and economists on Wall Street presume that lawmakers will avoid going over the fiscal cliff, or at least do something to buy time, Harris says. But expects the negotiations to have suspense-filled moments of brinkmanship, creating market volatility. Andres Garcia Maya, the global market strategist at J.P. Morgan Funds, says what happens with the fiscal cliff poses bigger risks for the market than how today's election turns pit. There is greater danger of policy error on this front, he told clients in a research note titled The Storm of Uncertainty.